All set up for you guys on Friday's show, but I have 24 kind of infrastructure companies, at least that I kind of compiled when I was originally reading through the documentation about the infrastructure bill and the previous one that went through and all this different stuff. There's certainly going to be more than these 24, but we're going to look at 24 different companies today for some opportunities. Margaret already mentioned a few. You've got Vulcan Materials, Marietta, you've got John Deere, Caterpillar, those are definitely on the list, and Nucor, also U.S. Steel, and a few others, Cleveland Cliffs, etc. So we'll talk a lot about that on today's show. If you guys have any input, feel free to chime in. You don't have to agree with my analysis on these things, but you can also throw in some different companies, and maybe we'll look at those as well. That's right. Uh-oh. YouTube is not receiving enough video to maintain a smooth stream. Interesting. Wow, it looks like my video stream is skipping on you guys, which I have never had happen before. And on my stream, it actually looks good right now. All right, well, this looks kind of weird. I'll just keep going, and hopefully this will pan out. But it looks like my video is all acting weird. Again, it's the infrastructure bill was signed into place, and part of that infrastructure bill is going to be about what? High-speed internet. Apparently, it stopped short right as my house. Okay, so here's our topic for today. We'll look at, is it too late for infrastructure? Basically, investments in infrastructure. And you can see I've got a couple different graphics which kind of break down the main three areas that I think you're going to see the money put into. Number one is towers. You see that's internet, Wi-Fi, etc. You have bridges and roads, which are the number two. And, your volume just started for me? Oh, weird. Okay. I don't know what's going on, guys. It looks fine now. It says to open a widget here. Let me see if I can open this widget. It says did not receive enough video. Kind of weird, but I'll fix that after today's show. So I'm going to run through a couple things here. And as you guys know, I'm a bitter cynic. I look at this infrastructure bill, and of course, part of me says, great, good, we need to fix some roads. We do need a lot of these proposals. I believe, I'm not one for rampant government spending. I think we would do much better if we had I'd love to see like a blockchain type of environment where if the government says we're going to give $100 billion to, let's say, highways and bridge repair, that it had to be tracked 100% on a blockchain so that we could all see on an open ledger exactly where this money went. Because I'm a bitter cynic, and I believe that out of this brand new $550 billion that's being allocated for infrastructure, I don't know, how much you think makes it to the bottom line? Out of 550, how much you actually think makes it directly to a service that it was intended for? Meaning, it's helping with the bridge, it's helping with the road, it's helping build a cell tower so we can have better Wi-Fi connectivity, it's better for water treatments. My guess is a lot of that money is going to be skimmed off the top by the CEOs of companies and just bad contracts, etc. So anyway, we won't go down that road because that just pisses me off and makes me feel anti-patriotic for a second. But let's go to where this money is actually intended to go. So just so we know, and this is per the government's official document, which you'll see the irony in that here in just a second, we have $110 billion for roads and bridges, which I think we could all agree we need some improvement on some of those roads. The question is, which area is it going to go? Oh, Margaret, you think 120 million out of 550 billion is going to make it where it needs to go? That would be a travesty. I mean, if that is in fact your assessment of it, I think we all have pretty negative views of government spending. But boy, if only 120 million make it to the end line out of 550 billion, we have a major problem on hands. My guess is at least half will make it. You'll probably see 400 make it to the bottom end, but where'd that other $150 billion go? If we had a fully trackable blockchain where literally when someone was going to buy some asphalt from Martin Marietta, okay, great, here's the receipt, it's on the blockchain. That would create such accountability and we wouldn't have these problems. But anyway, my rant is over. I'm not running for political office. Clearly, I feel much better. Okay, so 110 billion for roads and bridges. You have 105 billion for public transit and rail. Now let me see, my screen looks a little wonky. Let me see if I can fix this for you guys. We'll shrink this over there. Now, for those of you in America, most of you, did I say racist bridges? Roads and bridges, roads and bridges. Oh, no, we're not being anything racist here. For those in America, you may not feel like this is an important one, public transit and rail. unless you're in a big city, if you're in New York City or you're used to, in Chicago, we're used to kind of public transit as a way to get around, their systems need improvement. Now, when I lived in Italy, I lived there for almost 7 years, didn't own a vehicle, and basically I used the trains, the subways, metros, buses every single day, and I absolutely loved it. The amount of money that I saved by not having regular transportation was amazing. And they also have very good systems over there. So I actually like this public transit and light rail is what they're looking at to help maybe ease some of the congestion of roadways, but let's make those systems better and more robust so that people may look at them as a viable source of transportation. Right now, I think that in America, most Americans, let me know what you guys think of this one, most Americans look at buses as the only people who ride buses are poor people or don't have the capacity to drive a vehicle. I think that's that's obviously a bad perspective. I've used buses here in Southern California quite a bit, but if we improve that helps the systems out quite a bit. Now, $105 billion for public transit. I'm trying to get through this quick, but I love to rant. Yes, Alex, trains in Europe are the best. I love it, man. God, the train system in Europe was just so relaxing. There's nothing like getting on an 8-hour train from Venice to, let's say, Rome and just kicking back and watching everything, relaxing, having a cocktail, even bring drinks and food by. It's great. All right, so we have $73 billion for power infrastructure. This is, I think, one of the most important ones on here because we've seen some vulnerability with the power grid. We've seen some situations happen in Texas a couple years ago where it shut down whole cities. That needs to be fixed with some new technology. And I also have a company on this list that their job is really selling the circuit boards and a lot of the tools and products needed to connect and improve these power structures. So that's kind of a good one. Let's see. We got $65 billion for high-speed internet. I think we all agree that's pretty good. Ken says, let's just have autonomous cars. I would love it if we just had autonomous vehicles. I'm hoping that in my lifetime I will see that happen when it is just basically just walk outside, this driverless car shows up, takes you anywhere you want to go, trains, etc. Just bring it on. I think it's much better. Although I do love driving my car around, but all right, $55 billion in clean drinking water. If we don't, we're going to end up with a Mad Max type of scenario where we're all killing each other for clean drinking water. So I think that's probably pretty good. There's a resilience in Western water. I think it's called Western water dependency or infrastructure. This is also pretty important. Again, it's just making sure that our systems will continue to grow and be current with all the technology. You have $25 billion for airports. You have $65 billion for additional programs, which includes things like $7.5 billion for charging stations, which I know is something that Alex, who's with us here today, he was talking about charging stations a couple years back when he first started on this program. And now I think you're going to see more money pouring into those charging stations and infrastructure type of market. So when you look at this list, the irony is that list that I just showed you totals $548 billion, which is $2 billion short of the $550 billion that the government says that they're spending. So right away, we've already lost $2 billion to God knows where that went to. It cracks me up because this was an official government document that I got it from that says, here's how we're spending $550 billion, and it totaled $548. When $2 billion is a rounding error, you know you're doing good. Okay, so let me go through a watch list, and it's an infrastructure watch list. I may be able to send this to you if you guys want. It's just 24 ticker symbols. You could probably write them down and create it yourself. If you want, you can email me. That is TraderMerlin@gmail.com. I have a file that has like 8 or 10 different watch lists on it that you can use and export if you like. So feel free to email me that. If you email me and just say, can you send me your watch lists, and I'll get that out to you. Okay, so let's go over to the evil platform, TradeStation. The only reason I'm using TradeStation is because it's very easy for me to use. Now, as I go through this, I'm going to do a couple things. I want to mention, there's no real direct order for me to go through these, right? I'm just kind of going to go through and explain a little bit about each one. I think that it's important that we understand there's a lot of different pieces to this pie. And I think for me, one of the more important pieces is, as this infrastructure bill is now going to be fulfilled and all these little line items are going to start to have some money thrown at them, I think it's important to remember what the overwhelming need for this is. It's to improve America, to make America better, et cetera, et cetera, et cetera. But remember, a lot of the companies on this list I'm going to show you, the vast majority are American. And the reason I'm picking more American companies is because I'm pretty sure that in the disbursement of these funds, the primary target is going to be US-based companies. That said, there are some companies that are just far superior externally. So, for example, we'll look at companies like Cemex out of Mexico, right? They're a massive concrete aggregate type of company. Well, they might get some of the business, but I'm pretty sure we're going to most likely stay in the United States. So I'll let you know where the countries are, I'll let you know where the companies are located, and that may sway you a little bit in your thoughts on which one to buy into. All right. Let's see. Let's start things off with, let's go to the top of the list. So BHP, which actually just reported earnings, had fairly decent earnings. This is BHP Billiton. They are out of Australia. So I'm starting things off with the Southern Hemisphere here. There's going to be like 6 companies that all kind of do the same thing. Rio Tinto and Teck, etc. This company is Basic Materials. Now, most of these materials companies are going to be looking at things like oil, gas, copper, silver, zinc, gold, iron ore, coal, etc. And to me, I would prefer them the more diversified, the better with these companies. Now, BHP is obviously one of the major ones out there. It's just a massive company. It's just in Australia. So take that for what it's worth. Now, from a technical perspective, what do we think about Alan's marijuana infrastructure? Maybe. No, Margaret, I didn't see that one. I meant to watch that last night. I will probably, I'll probably watch through that tonight, actually. So let's just, what I'm going to do is I'll do one by one. We'll go through 24. This is going to take a while, but I'll go through each one. We'll say what they do so you can get a sense as to what, how that might fit your portfolio or your portfolio needs. And then we'll just do a very quick look at the technical side. So if we look at BHP here, as much as I like them and they are a bellwether in the industry with Basic Materials, this price chart does not look good right now. You can see that it was going sideways for the better part of all of 2021 and then just fell apart in August. It's gone from $80 down to $53. Right now it's basing, which is a good sign. Right? You can see we're basing right there, right around $52.32. But it just doesn't look great. And what if we look a little bit longer term on the weekly time frame? Well, I mean, we could make the argument that it's been on a prolonged uptrend, that we've come down into a demand zone, right? You're actually just about to start closing this gap. It looks to me like a better buy right around $48 for BHP, but this most recent sell-off, I don't like. I'm not a big fan of this most recent sell-off. Does not look good. All right, next on our list, we're going to go to BIP. Now, this is a twofer, right? So Brookfield Infrastructure is probably one of the most diversified infrastructure plays on this list. Now, there's BIP, and then there's BIPC. They are pretty much the same company. They're like just kind of spin-offs of each other. The irony is, chart looks very different. So let me go to a daily here. Here's your daily of BIPC, which is Brookfield Infrastructure Company. And then you have BIP, which is Brookfield Infrastructure Partners. So they're sister companies, slightly different what they're into. Bottom line is they're looking at diversified infrastructure. What we mean there is they're looking at things like natural gas, electric transmission lines, coal exports, bulk freight. So the reason I put this on the list is as we look at infrastructure growth, there has to be obviously the electric transmission, right? Power. We've already talked about it. They're going to doing a lot of adjustments to the power grid. Natural gas might not be so important. It is an alternative energy, but it's not the focus of the infrastructure bill. You have coal export, which, I think coal, I'm not so concerned about. But Brookfield Infrastructure has a lot with bulk freight. Now, we know we have a lot of shipping issues going on right now. But as this infrastructure demand and money gets allocated, I think you'll start to see bulk freight being necessary to move things around to get it to where it needs to go. So that would be one. All right, let me see. CRH. CRH is the largest building materials company. Used to work for them. Now I compete with them. Stock options have been great for me, though. All right. Big Eb's going to probably tear me apart on this analysis today. So if we look at the price charts of these ones, you got BIP. Chart looks great. Right? Higher highs, higher lows, great trend. I mean, really, since it bottomed out in 2000, this has been an absolutely beautiful play here. And to me, trend is strong. Buy pullbacks on BIP. Now, BIPC looks a bit different, right? It looks like that uptrend is now officially over, and now we're starting to see that drift down. So since those peaks we saw back in early 2021, not looking so good. Now, granted, last week we actually made a high that would break that kind of most recent high. Let's see if I can draw that out for you. You can see right here, there's the most recent high, which is all the way back into September. So September 10th. We just popped above that, which is a very positive thing. If you're going to break a downtrend, then all of a sudden it looks like a bull trap, and we came right back down to 62.75 on it. So both of the BIPC, I would not be that interested in buying into. BIP looks a lot better. It's got a strong trend in place. And there you go. So I'm going to do a 2 for right now. So I've got Caterpillar, which Margaret mentioned earlier. Now, of course, with all this, there should be, I can never say will be because you just don't know, but there should be a significant increase in the demand for heavy equipment. And of course, the two main players there, you can see right now I've got Caterpillar on your screen, and then you've got John Deere. Those charts look almost identical, don't they? I mean, you almost don't even know that I switched over between Caterpillar and John Deere. They look almost identical. Now, out of the two, John Deere does look stronger. Same basic reason that I gave. You have this nice strong uptrend, and then all of a sudden for the past 6 months or so, it's just been feeling a bit weaker. Now, the longer term picture here for something like Caterpillar, you've got this massive move up here after all the stimulus and people thinking that the infrastructure bills were going through, and now it's having this bit of a pullback. So the question I have, and this is one I'm asking myself as well as you guys, is, where do you see Caterpillar going from here? You would think that Caterpillar would be the beneficiary in this, and that there are a lot of heavy equipment being bought for new roads, new bridges, new easy lifts and scissor lifts and things like that. Cat would be forefront, but it feels like it may have been a case of buy the rumor, sell the news, and all of a sudden now we're starting to see this one drift down. So as much as I like it, if it gets down below these lows that you saw for them a couple weeks ago, right around, let's say 187, I would think we're actually going to be heading even lower. It does not look great on Caterpillar. And on the weekly for John Deere, you have a very similar picture. It actually feels stronger. This almost looks like a bull flag. So for those who might not know what a bull flag is, you take it from where that rally started to the peak, all right, which is a 279% move in a year. That's very good. And then you take a line from across the peaks, which would look like that. And you take a line across the most recent lows, which we can make the argument that it's somewhere in that ballpark there. That's what a lot of people call a bullish flag formation. And what it symbolizes is a huge surge in interest, emotion, euphoria, whatever the case may be. And then it just has a breather where it's pausing. And notice on this weekly time frame here, it's not really making higher highs. It's not really making lower lows, just ever so slightly lower lows. So I think at this point you kind of wait and see with John Deere what it does from this point. Normally, a bull flag like this is a very bullish pattern. And the way that a lot of people will use this from a technical analysis perspective, if you want to go straight technicals, is they will take this move from the bottom all the way to the peak, and they will take that up to where the breakout would happen. So let's say we're going to use this peak right here, right around 387 as our break point. Well, how far up would that be if it did break? Well, let's see. It's going to be a giant move. That means that it's basically calling out a high for John Deere right around $655. Now, I think that's a bit of a stretch. They have to sell a shit ton of tractors to get up to that price level. But that's your traditional way that people would be using measuring objects on a bullish flag formation. So all in all, John Deere does look pretty darn good for the long haul. It's just a question of we're channeling kind of slowly down on John Deere right now because we're in a bullish flag pattern. All right, so I got 2 out of the way on that one. Next, we're going to look at CCI. This is Crown Castle. This is a little bit different. This is a U.S.-based company. Now, by the way, both Caterpillar and John Deere are out of the U.S. They're out of Illinois. Caterpillar's out of Deerfield, Illinois, and I think John Deere's out of Moline. I forget how you pronounce that one. So here's CCI. It's kind of a different play here because they own 40,000 cell towers and 80,000 miles of fiber optic cables. Now, if broadband internet's going to be, pumped into more households, fiber optic is probably going to be a big piece of that. And this is a pretty big footprint in that space. Now, again, for me, it's not that I'm excited about Crown Castle. Is it the time to buy? And if I look at this price chart, I don't think it is. The only time that I might be interested in buying Crown Castle is if it gets these highs, above these highs we saw from 2 weeks ago, right around 185. Why? Well, because it peaked out here in July of this year. It peaked out and has been really looking kind of weak ever since. So if it doesn't get back and make some new highs here, we're going to see the trend drift down even lower and lower and lower and lower. So not a huge fan of the price chart, but I do think that there is going to be opportunities in this space, specifically with the cell towers, and those are in the fiber optic space. Next we got CE. I always mispronounce this one, Celanese. This is a materials company out of Texas. They do engineered polymers, paints, adhesives, and coatings. So as we see more infrastructure stuff, industrial strength adhesives, and there's quite a few chemical companies I put on this list, stand to do rather well. Now look at the price chart of this one. It just formed a double top. That's obviously not a great thing from anybody who's bullish on this one, but the price chart looks great. It is higher highs, higher lows, just been going higher and higher and higher on this one. Keep in mind, we were down in the $50 range back in April of 2020. Now all of a sudden we find ourselves up at 167. Yeah, AMT's another big one. AMT also, American Tower, I think they reported earnings. I think they just reported earnings, if I'm not mistaken. Like maybe even today reported earnings. And this is in a similar spot, right? American Tower, they've got hundreds of cell towers across the country, thousands of cell towers across the country. And technically, we're at a spot right now where I would actually be okay with it. I'm conflicted on this one because if you look at where we are at this exact second on American Tower, and this is a daily on AMT, you can see that today's sharp decline puts us in the lowest possible range if you're going to draw a demand zone on this area in October of this year. So we've done an aggressive pullback right into a demand zone, yet it's making lower highs. So it's looking weak, and if you're going to take a shot at it, now is actually a good time. But I think if we get below here, you got to pull out of that trade and shelve your longs, if you will. Even though I am kind of bullish on the industry, I think that you're going to see more towers and more fiber optics, and CCI and AMT are definitely at the forefront of that one. But yeah, this chart this looks better than CCI, right? I like the AMT one better, even though it looks like it's got that big sell-off. It's right into an area of demand. At least this has a potential opportunity for me right now. All right. So let's see. Did I do CE yet? Oh, did Celanese. That's just chemicals. Looks good. I think you just wait for a little bit of a pullback. You might even be able to look at this 161, 161.50 mark on CE as an opportunity. Now, here's one that I think Alex would probably be excited. Alex, was this the one that you were in? ChargePoint? I think this was the one that you were in. He was in this thing at a few dollars. And I remember he had this huge rally run up and he was asking me what he should do. And I was like, well, I'd take some profit on that one. And it just kept on going up and up and up. So, Alex, I hope you're still here and I hope you made good money on this one. I think this is the one you were mentioning, CHPT, ChargePoint Holdings. Now, there's going to be, I think it's $7.5 billion being put into charging stations across the United States, which obviously would do very good for companies like CHPT, who right now has, a good footprint. But if they're looking to really expand that, these guys have already gotten a little bit of a foothold in that space, so I think it might do well there. So technically, what do I think about CHPT? I don't have any real clear read on this one, right? Big volatile swings one way or the other. And this most recent one that we saw that goes from late September, early October to pretty much where we're at now. Oh, Gevo. Okay. It looks similar to that move that we saw going on from April or May all the way up until June, right? Big parabolic move, and then all of a sudden just drifting back down. So I don't have any real clear-cut levels or zones I'm excited about on CHPT, what I would say is if you're looking at that area or that company, there are some rally-based rallies that we can see a little bit lower, which may present some buying opportunities. But with this one, I think you have to be using stop losses because how volatile this one is. What about, what was the one that Gevo? I haven't looked at that one since you mentioned it. Gevo. Whew. Another nice one. This actually looks better than the chart that I just mentioned of CHPT. Why? Because, well, it's just slowly drifting to the upside. It doesn't have ballistic moves, but there's still this a nice slow uptrend going, at least since August of this year. Let's see. Keep going. CLF, Cleveland-Cliffs. So there's, I think, 4 steel companies on this list. I know, Margaret, you mentioned some earlier. We'll look at some more, but Cleveland-Cliffs is an interesting one because they're vertically integrated, meaning that they have every step of the process from raw materials all the way through to finished product. Now, a lot of people are just in the refining pieces. They're doing one segment of it. Cleveland-Cliffs is kind of nice in the fact that they have a vertically integrated process with all of it in place. Technically, it actually looks like you're getting a potential buying opportunity. I think you got to wait for it to get a little bit lower into this area where it kind of has a basing and then an aggressive move out. So, $21 might be a nice buy point at it. You did form a big double top. If you're a technical person, you got a big double top formed on Cleveland-Cliffs, which does make me feel a little uncomfortable because it couldn't make a new high. But until it starts making some new lows, I think you're okay with Cleveland-Cliffs. So let's see. And then Big Eb says, don't trust this one. It's badly run. Look, we need cement. We need aggregates. Oh, and by the way, ChargePoint Holdings, Cleveland-Cliffs, All-American. CEMEX is out of Monterrey, Mexico, and I don't know the management. Big Eb seems to think that they're not that great of management. That's fine. But we will be needing aggregate materials. We will be needing gravel and sand that go to making up a lot of these infrastructure projects like roads, bridges, etc. So it may not be coming from CEMEX, but we certainly need those types of products and services. So let's see if we can explore a couple of different options. Out of everything that I've looked at so far, this is the one I would look at and say, stay away from or go short. Not because Big Eb said that he didn't like it, which I respect his opinion, but if you look at this, what's the price chart been doing? It's lower highs, lower lows, and has been for months. So this to me is a broken trend. Who knows what the reason is for CEMEX, but this is just one I've had on my list for a long time. It was doing great at the tail end of last year. Now all of a sudden CEMEX does not look that great. All right, we looked at John Deere. Let's look at Eastman Chemical Company. Of course, everyone needs chemicals. Eastman is definitely, Vulcan's on my list. So is Martin Marietta. We'll get to those here in just a little bit. We've got a little bit further to go. How much time do I got? I better step this up. If you look at Eastman Chemical, and obviously there's a wide variety of different types of chemicals out there that companies are using. Eastman is one of the bigger names in this space. I sound so conflicted sometimes because if you look at our price chart right now, you're coming into the ceiling at about 117, 116.50 to 117. You're coming into that one. It actually bounced off of it today. So it looks strong for the past month and a half, but you're coming right into some overhead supply. If we can't get above that, well, then I think you're going to see this thing drift lower because it's been making a series of lower highs and lower lows. If we can get a close above, let's say 117, then all of a sudden you might have some more leg room for Eastman Kodak to the upside. But I'm getting I have no strong conviction in saying go long or short Eastman. My gut would be more go short Eastman simply because we're coming to that overhead supply and we're making lower highs for the better part of 4 months. Actually 6 months. ESI is our next, I'm not going to say victim. This is Element Solutions, both Eastman's out of Tennessee, and Element Solutions is out of Fort Lauderdale. They are also chemicals, but they're different, in a different ball game, and this one's probably a bit more appealing. They do specifically chemicals designed for circuit boards, chips, tech components type of thing. So their price chart looks epic. Certainly wish we would have jumped on this one back in March of this year or last year when it was down around $6, because now you're looking at 25.62. Just made a new high last week. Things look pretty darn good for ESI. I'd be bullish on this one, but waiting for the pullback. You would not surprise me to see a pullback down to around 22.50 on ESI. What else I got? Let's see. So there's ESI. Now Freeport-McMoRan. All right, Freeport-McMoRan's a slightly different play. If we're looking at infrastructure, one of the basic materials for homes and electronics is copper. All right, some statistic, and Tom, you might know this one better than me. If I remember correctly, electric vehicles use something like 40% more copper than traditional fossil fuel burning vehicles, and that's because of a lot of electronic components. And Freeport-McMoRan is probably one of the bigger copper mining companies in the world. Now, Freeport, it's multinational, but based out of Phoenix, Arizona. So again, you have a U.S.-based company. Price chart, I didn't like it because it had the same basic weakness that we've seen for a lot of these companies over the past 6 months. But what has Freeport-McMoRan been able to do over the past couple of weeks? Well, it has been able to make new highs, and all of a sudden, it feels like the trajectory is back to challenging the all-time highs just above $45. So I actually like FCX. Can't believe I got out of this thing at such a low price. I bought it long time ago. All right. Yes, so Tom says copper and a lot of rare earth materials. Yes. And I think that's one of those environmental things we can talk about on another show, which is, electric vehicles, they're such clean energy. Yeah, but we have to destroy so much of our earth and ruin a lot of maybe rivers or water tables to get to these rare earth minerals. So there is a cost to it. But yes, we could save that for another debate. This is really just run through a list of 24 companies for you guys. So Freeport-McMoRan, I love it. I think that this is probably going to be a good play here, not only just because of the copper, but also other materials that they're mining out of the ground. Yes, Jerry, uptrend established. If you go through the core strategy and you draw your boxes on it, we just broke out, so looks good. All right, LYB, this is LyondellBasell Industries. This is multinational, so they're all over the world. They're chemicals, plastics, polymers, but look at the price chart. And again, I'm not cherry picking here and saying, hey, these are all companies I love. These are just companies in my watch list in this sector. And this one looks bad. Right now, it's drifting lower. You're making lower highs, lower lows. Granted, last week or 2 weeks ago, we made a higher low, but still doesn't look great, right? Doesn't look great, in my opinion. So I would just leave LyondellBasell Industries alone, even though I do think they're great for the chemical side of things. Now, here's probably one of the better plays, and of course, you can see people flocking to it. You have Martin Marietta Materials. This is, again, one of your big aggregate companies. MLM is a ticker symbol. They are out of Raleigh, North Carolina. They're gravel, sand, concrete, asphalt, etc. So this, to me, is probably one of the bigger players in the United States. You have MLM and Vulcan, VMC is Vulcan Materials. They're out of Birmingham, Alabama. Here's your VMC. Notice how tightly correlated those two charts are. I think both of these are doing great. Again, Vulcan Materials is gravel, sand, concrete, asphalt, which I think you're going to see significant consumption. If, in fact, we're getting $110 billion for roads and highways, well, that's going to be using a lot of these resources. So I think two good plays, both technically and fundamentally, are looking at Vulcan, which, look at this uptrend. Higher highs, higher lows, nonstop. It had a little bit of a sideways move for about 4 months, but it's at all-time highs again. And then you look over at, let me bring back up MLM. Chart looks almost identical. Like you could almost layer these two on top of each other and they look identical. So I like both of them. I think it's, again, waiting for them to pull back. Pullback on Marietta looks to be about right around 390, 391. On Vulcan Materials, you got a similar picture, probably getting closer to 188 or 189 as a pullback buying opportunity for those two. I don't know, Margaret. She says, the Australian ETF EWA a good play because of natural resources. Well, if it is because Australia is such a natural resource exporter, but you're getting a diversified portfolio because EWA is not just
natural resource companies, right? You're getting a whole cross-section of Australian companies, kind of like going into something like FXI, and you're getting a whole cross-section of China, not just one targeted, I guess, ecosystem, if you will. I'll show you an ETF here that's maybe a good opportunity or potential for you. So let me keep going down the list because I'm very close. You have one of the bigger steel companies, Nucor. This is the largest domestic steel manufacturer in North America. I think it's looking decent. We're on it looks to me like this most recent leg is going to be challenging these all-time highs. It feels like it got a little extended, honestly, but I think a lot of this has to do with the infrastructure bill. I have people feeling optimistic that they will be the recipients of some of that money. So looks pretty good. I'll be even happier if it broke through these all-time highs, but right now 109.96, still looking pretty good. Here's one that's a little bit different. Now, most people don't talk about this company. I put it on my list because they're talking about school buses and all sorts of different infrastructure vehicles. Oshkosh Corp, which is ticker symbol OSK, is a company that makes all kinds of crazy vehicles. I mean, these guys make tons of stuff from mail trucks, fire trucks, mixers, cranes, lifts, all kinds of pieces, which I think is important, especially since everyone's looking to buy these vehicles, that OSK could do very well. Now, if you look at this price chart, you guys all, know how I analyze price charts at this point. Really, until about 2 weeks ago, OSK did not look great. Right, it had this pretty aggressive sell-off going from a peak back in March 17th, right around 115. Well, all of a sudden it fell over the next few months to where on October 13th it was down around $92. So that's a pretty significant decline. All of a sudden we have moved up. We have crossed above some moving averages, some trend lines. Let's see if I might have them pre-enabled here. Boom. So here's your, this should be a 50 to 200, just judging by how smooth they are. Right now, it just made it back to its 200 period moving average. It broke its 50, its 20, etc. So it's definitely looking better. But I think that the long term, they could be a big beneficiary here with a lot of these orders for new vehicles. All right, let me turn off these alarms here. Not alarms, there we go. Disable my moving averages. Okay, got rid of that one. All right, I'm almost done. We have Rio Tinto, right? So Rio Tinto, they're out of London, UK. They are basic materials, copper, silver, zinc, iron, all that stuff, but they look trash. Right now, their price chart does not look good, and it's hard to say because they're such a giant company. They're on paper, they're good, but for whatever reason, they've fallen out of grace. It does not look good. Another one, which is from Vancouver, Canada. So we've got some Canadians in the mix. That's TeK. TECK, Tech Resources Limited, right? They're out of Vancouver. Again, they're same basic materials. Look at their price chart. Completely different story than Rio Tinto. So if I had to choose between TeK and Rio, I'd be going with TeK because that trend is so strong and looking great. And I've got two more here, and then I'll go to an ETF for you. URI is an interesting one. This is United Rentals. In this grand scheme of things, and maybe this is why Caterpillar and John Deere's chart don't look epic, is you may have a lot of this equipment sitting at United Rentals or rental companies that are going to be renting that out to these big contractors that are going to be doing the major highway developments and bridge construction, etc. So United Rentals has got tons and tons of centers around around the world, but over 1,000 of their centers are in the United States. This is a pretty good play as well, although look at this price chart. I mean, this looks almost like a cryptocurrency chart. If you go back in April of 2020, this thing hit a low right around $58. And actually 58.33, just breached 400 last week. So that's a amazing 8x return on URI. Is this Bitcoin I'm looking at? I'm not sure, Big Ab, exactly why Rio has been so hammered, but it just looks awful. It's funny because you mention the name of a company like Rio and you go, man, yeah, we know Rio Tinto. They're huge. Well, who cares how big they are? If a price chart looks like this, you just got to stay out of the way. It just looks like it's drifting lower and lower. At some point, Rio should be a good opportunity, but right now, it just does not look like the place to be parking capital. Last one, and then I'll go to an ETF, is U.S. Steel. So we already talked about Nucor. We already talked about Cleveland Cliffs as far as steel goes. This isn't the greatest chart. It's really been very erratic over the past few months, but still
U.S. steel manufacturer, which could benefit from the U.S. steel purchases, looking fairly decent, but you got just basically sideways consolidation right now. All right, last one I wanted to bring up was an ETF that doesn't have the biggest liquidity, but I think this is probably a safe way to go if you're looking at playing the entire sector. And I just have this is the only one on my list. There probably are several others I just don't have on the list here. But it's got over 100 different infrastructure plays inside of PAVE. And when we say infrastructure plays, they're really about raw materials, heavy equipment, and construction. So again, if $100 billion, $110 billion is going to be going to roads and bridges, the PAVE ETF is going to be really loaded up on those types of companies. So I have not looked through the exact components of PAVE, but I'm willing to bet you dollars to donuts. It's got Vulcan, it's got Martin Marietta. It's going to have some of the bigger construction pieces like John Deere, maybe even Caterpillar in there as well, or they're making those types of equipment. So PAVE might be a good one. And just look at the price chart. You know, my gut tells me that this is a buy the rumor, sell the news because it's just gone up so much. However, you know, that money's being dispersed. And until this starts to sell off and look negative, go with the trend. This looks absolutely beautiful right now on PAVE. You can see volume has started to pick up, doing an average of about 1.5 million shares traded per day on it, which is right around the minimum for me as far as a liquidity threshold. But a 2.1 PE ratio? Really? Wow. That's pretty darn cheap. Pretty darn cheap. Yeah, you know, some of these mining companies, though, and steel companies, their numbers always are weird to me when I look at the final numbers and PE ratios and things like that. But hey, if you find U.S. Steel's at 2.1, that's a pretty darn good price point. Okay, I've gone through quite a lot of stuff here. And again, I do think there's opportunity out there. I'm very skeptical on this money actually making it to these companies just because I think we have such misappropriation of funds and such, not the most trustworthy people receiving these funds and looking more towards maybe making their companies profits as opposed to actually doing what this money was intended for, which would be to help improve our infrastructure. Yes, it'll improve our infrastructure, but not to the tune of 550 billion. It'll probably be more like 400 billion. I sold PAVE. Wade. Yeah, you did, Big Eb. Man, that is a beautiful. That's actually the best looking chart of everything we looked at. I ran through 23 companies and one ETF, and this is without a doubt the best looking one with regards to consistent trend and just keeps on going strong like bull Tatanka. All right. Holy cow, I didn't realize they were gone that long on this one. So one last question here that I think ties nicely to all of this is, and by the way, if you want, you can email me and I will send you it's an Excel spreadsheet. It has a whole bunch of different watch lists on it, just kind of roughly thrown together. If you want that, you can have it. Just email me at TraderMerlin@gmail and say, send me a watch list, please. Got to throw the please in there, though. My mom just taught me right. This question came in from Lee. He says, how do you think the infrastructure bill will impact inflation? I think it's going to have a big impact on inflation. Think about what we just talked about. You've got things like Martin Marietta or Vulcan Materials, right? Aggregate, sand, concrete, asphalt. If all of a sudden we have this much money pouring into the economy for all these projects, what do you think is going to happen to the price of asphalt, sand, gravel? All right, all of that stuff's going to be going up. If I have big orders for specific types of heavy equipment, that demand is going to drive the price of those machines up. So I think unfortunately, it's going to have a pretty negative impact on inflation, meaning it's going to keep rising and push it even higher. So I love the fact that this is coming in, money's coming in. I do think we need to work on the infrastructure in the country. It's just as you have a period where all of a sudden inflation is starting to spike a bit, and spike is the operative word here. Now you bring in $550 billion worth of new money pouring into construction. Those material costs are going to start to rise as well, and all of a sudden now we see greater inflation. So Lee, that's I think it's going to have a big impact on inflation, moving things to the upside. All right, I had two other questions. I had a question on Disney, and I'll look at this last one here. I'll get to the Disney question for Ken tomorrow, but Scott asked this one. I have to wrap up the show. It says, can you look at Target today? Shooting star, potential short, and this is for Scott. All right, so let's go look at TGT. So while I like the analysis, first off, let's look at this price chart. Shorting Target is a ballsy move.
right? This is a very, very strong trending security. Now, granted, supply chain disruptions going on with China, delays on all these massive shipping containers. I'm sure that Target's going to feel some pinch there. So will Walmart. That said, is the analysis right? Is that a shooting star? Yes. I think that's actually a great shooting star. It should be red, but that's okay. For those who don't know what we're talking about, I'm addressing this last candle that formed today. Not only is it a shooting star, but it also is right up into the supply that you see back here from August. So, how would you trade it? Well, I would wait, because you can see right here at $261.34 is the low of today's range. So I would wait for it to open up above that line tomorrow, meaning it's got to open above 261.34. If it starts to sell off down below that during tomorrow's trading session, then okay, potential short. The problem, and this is a big problem in my opinion, is if you look at the earnings calendar, you've got earnings for, I think Target is on Wednesday. So Target's earnings on Wednesday. Personally, I don't think it's worth the risk. I think you leave it alone. I don't think you don't short, as Naum just posted here. It says it's Christmas. Personally, I don't think that you short anything going into the holiday season. I've lost way too much. It was one of the biggest losing trades I've ever had, was shorting Best Buy going into the holidays, $100,000 worth of puts, and got zero, right? Basically lost it all. So that was probably the biggest, that is the biggest loss I've ever taken, shorting something that I thought had to go down. It looked terrible, and unfortunately that one cost me dearly. So I won't short anything, at least as a long-term hold, right, over the holidays. Am I going to short on a day trade perspective or for a couple days? Sure. So be careful with shorting this target. Their earnings come out Wednesday before market open, I believe. I don't have that earnings calendar in front of me. I do have tomorrow's earnings calendar, so why don't we take a look at that one? So here's what we have for tomorrow, the 16th of November. Walmart, which should probably give you a pretty good read on what's going to happen with Target. So tomorrow before the market opens, you have Home Depot, you have Walmart, and you have NetEase. Three pretty big companies reporting earnings before market open. And then there's your BHP. I thought they came out today. I guess they come out tomorrow. BHP, which we had at the top of our list, is one of the pretty big natural resource company. It has a couple dash marks here, which means that they're supposed to report tomorrow, but because they're Australian, who knows? They might be a little bit late. You never know exactly when those are going to come out. So that's what's happening earnings-wise for tomorrow. Economic calendar. Well, we've got so much, I had to split it into side-by-side tables here. There's a ton of information, as you guys may have seen with the Monday Morning Must-Knows. Definitely focusing on the retail sales numbers here. What they've done historically is they create such a low bar for retail sales that it's easy for us to jump over it. This is the first time I'm seeing expectations of retail sales not negative. You can see 1.3% is what they're expecting for retail sales on tomorrow's reading. The last 5 months, they've all been negative, meaning they expected a contraction for the last 5 months, and we've beat it every single time, which obviously is what this is designed to do. So 1.3% is the expectation for tomorrow. We'll see how that rolls out. You also have industrial production, capacity utilization rate, and business inventories, as well as some housing data. The NHB Housing Market Index coming out for the U.S. as well. You've got 3 members of the Fed speaking tomorrow. You have TIC long-term purchases, and that's just in the U.S. We've got our Magnum PI day tomorrow, which means that the British pound has CPI, PPI, RPI, and I don't know, there's like an MPI number coming out or something like that. And then early in the morning, you're going to have flash GDP numbers coming out for the European Union. So quite a lot of stuff happening for tomorrow's trading session. Okay, out of breath. I'm winded going through that last little outro there. All right, everybody, that's going to do it for me for today. While Walmart earnings could impact Target before they even report, I agree. I think that, if you look at them, they're pretty close to being the same type of company. So if Walmart has a pretty big earnings miss, what we'll get from Walmart's earnings tomorrow is a clearer picture of what that supply chain disruption is looking like. And if Walmart gets hit really hard with it, you can pretty much be sure that Target's going to take a dive tomorrow as well. And then have their own numbers come out on Wednesday morning. So there you go, guys. Hope you enjoyed today's show. Margaret, thanks for asking about the infrastructure stuff on Friday, because Well, you made me a talk track for today. If you have something you want me to address for tomorrow, you can email me, TraderMerlin@gmail.com. Let me know what you want to talk about on tomorrow's show. Give me some topics, some questions, and I'll hopefully get all that done. That's it. Thanks, guys, so much. Notice we didn't mention one word on crypto today. Surprise! Not one word? Wow! We'll get to that later on in the week. Anyway, thank you guys so much. Have a fantastic remainder of your day, and we'll see you all tomorrow. Take care.